And good afternoon. Welcome to Market Talk for Monday, April 26, 2021. Great to have you here with us once again as we start off another week. I'm your host, Jesse Allen. Good afternoon once again. Find us online. MarketTalkAg.com is our home on the web. MarketTalkAg.com. You can find all of our social media links there, our YouTube channel, all of our streaming sources, including Apple Podcasts, Spotify, iHeartRadio, Amazon if you use your Alexa, and so many more. Find it all online, markettalkag.com. Well, we come in here after the weekend. We saw a really strong week last week. Friday was a little more of a mixed trade. We come in here, though, after the weekend weather forecasts and more, and scream this grain market higher again. Got a lot to talk about. Let's bring in our good friend Bryan Doherty with Total Farm Marketing joining us here this afternoon. And Bryan, great to see you and great to chat with you once again. And man, oh man, exciting, wild times in this grain market. Man, just another strong day. A lot of fun money, it looked like, moved into this market, Bryan.
Yeah, a lot of activity, and yet we're just in that phase in the market right now, Jesse, too, where the sellers who've tried to sell, whether they're small speculators, large speculators, or just whomever, they've been getting beat up, and so they become a little bit more, let's say, timid. Probably not as much volume, and the buyers, hey, if you're making money, you're doing what you do to make money. You just keep buying because it's working, and that often propels prices higher. You get an acceleration. 6 days in a row close higher on May corn, 25-cent gains today. Export inspections strong, 76.8 million bushels. So, the concern that we're not shipping fast enough, I think it's got to be getting behind the market, because we've heard that, and rightly so, maybe back in January and February. We're now in April, and things are really picking up. 60.7%, Jesse, of the corn that is expected to be sold has been exported. So that's really, a great number to be at today. Soybeans, 89.1% of the 2.280 billion that are expected to be sold. So we're over 2 billion, 2,031 million, a good number today, 8.6 million. So just keep, I keep talking about all the things that came to the marketplace today, but there were a lot of things that the market took as friendly and moved with it.
Very, very true. I think breaking some of those down, weather seems to be the forefront right now. We've been building a weather premium in Brazil, that safrinha crop, a lot of concerns there, a lot of concerns in the U.S. as well. But I think let's focus on South America first. I know that's one of the big storylines we're watching, that safrinha belt. The issues down there is really, really starting to play an important role in what our markets are doing, Bryan.
It sure is. If you're a supply side guy, that is, you're looking at the supply, world supply, it's getting smaller practically on a weekly basis, and that's the big market right now, or the big event is the second crop, safrinha crop. Last week there were some private forecasters that were arguing some of the states, Parana in particular, down about 20%, maybe more than 20%. That's some big numbers. That's some really dry weather. That's some really adverse growing conditions. Crop ratings in that part of the world have been on the decline. But there's a little bit more to the southern hemisphere, or the South American story too. Talk today of Argentina placing import or export taxes. That's a big deal. That what they're saying, the signal again is, hey, we need to keep stuff in house. We've got inflationary concerns. We need to take care of our own first, and selling corn to Brazil, because Brazil might have a shorter crop, is a secondary priority. So I'm inclined to think that where there's some smoke, there's some fire. The other thing too, Jesse, there was on the wires today about Brazil feeding wheat to cattle. Another signal of tight corn supply, but you're using wheat supply. So wheat prices were up sharply today. So, and then lastly, the weather here in the U.S. and a weaker U.S. dollar. Yeah.
Yeah, well, and talking about that weather here in the U.S. and the situation here, we know it's dry. We know it's especially dry, say, west of the Mississippi Rivers, kind of, the northern plains and northwest plains, western, you name it. It's dry. I'm hearing more concerns from farmers about how dry it really is out there. We're starting to get back in the field this week with warmer temperatures, but I've fielded some questions from some guys and some thoughts, and I'd love your perspective on this. We're seeing the elevated prices. We're seeing things continue to climb on the future. Basis is stronger. I'm hearing from some guys though that they're a little concerned about marketing too much new crop right now because of the worries that they might not produce it this year with how dry it is. Are you fielding anything like that, or what would you say to that thought process out there?
This isn't new. It's been around for weeks and months, but it's not as important in February or let's say mid-March as it now starts to become important in April when you're actually where the rubber hits the road and you're starting to plant or wanting to plant. And so when you look at the drought monitor map and you look at, North Dakota and a lot of red, severe drought. And when you look at just where it's dry and the origination of corn, and it's becoming more and more important. Here's the important part. As we talked to several producers in the Western Corn Belt, they are of the mindset that, hey, look, I know these are good prices. I know I should be selling, but I want to be careful. I don't want to sell. I have such a depleted subsoil that last year I did okay in dry weather because I had subsoil. This year I might start all dry and so there's a lot of confusion, uncertainty, and just caution. All of this in part feeding this bullish frenzy that's happening right now.
And I think, with that bullish frenzy, I mean, I've heard a lot, and we've talked about this, Bryan, about making even some of those incremental sales. If you have old crop left, I mean, definitely one of those things if you haven't, consider it because, you don't want to catch the falling knife if this market goes down at any point. But on the new crop side, we've talked about some incremental sales there, maybe, up to, that crop insurance level, at least something like that. And I just think it's very curious to hear the different mindsets from different producers as far as their marketing, as they're looking at this. And there's a lot of emotions at play with these prices, Bryan.
Yeah. And so we've spent at Total Farm Marketing a lot of years and time talking with farmers about managing the emotion, embracing the volatility, make the trend your friend, all of those good things. What it really boils down to for me is two words: balanced approach. Be balanced in your approach to marketing so that you don't get severely caught one side or the other. Everybody knows you're not going to be able to sell the high and buy the low, and you're hoping that you market well in an upward rally. Yeah, you don't overdo it. It's all those emotions that are tied to decision making. So my suggestion is to really understand the tools you have available to you. You should be making sales, right? As you said, what if things tip over? You're trying to catch a falling knife, and then you make a little bit of sale here, and then not enough, and it goes lower, and finally you give up and sell, and then it comes back, and all that emotion. So what if you could sell here and retain the ownership on a fixed risk bull call spread or a call option or something that would allow you to feel confident in making a sale, stand in front of the market for the bull run if it continues, give yourself confidence to sell more. What does a put look like in this environment? So that whole balance, that as we head maybe toward the 1st of June, that when we get to that window, doesn't really matter where the market goes. You feel like you've done a good job, maybe about half through forward contracting, half through put buying, half through non-pricing, half through buying calls. No matter what happens, you're in a position to manage the volatility.
And that's what it all comes down to, is managing that volatility for sure. And again, grain markets today, very elevated once again. It'll be interesting to see where we go the rest of the week. Let's shift our conversation to livestock, Bryan. Interesting day there today. We started lower. We rallied. Live cattle, lean hogs especially, had a decent day with some positive closes, and even feeder cattle well off the lows. With these higher grain prices, this cattle market's really, really taken a blow here the last week or so. What did you see there, though, today? Any positive signs to pay attention to?
Yeah, the feeder market still finished in the red. Not dramatic, but still down there. But the hogs, tight supply, good demand. That continues to be the story there. And they've seen the kind of run on a gas, let's call it around 105 in the June. Really high prices, so holding well. That, I think, is a combination of expectation for continued strong demand and limited supply, not tight supply, but limited because of the way COVID sort of hit last year. And we saw the euthanasia and some gilts going to slaughter and heavier hogs. All that had to be worked through this year. So now you get this it's not a loophole, but it's a window where you just have less inventory. inventory probably comes down the road. Maybe now the kink in all of this is high protein prices, high corn prices, how much the hog producers really expand. The cattle market, nice jump there. Expectations have been for a long time that, look, we're going to have good demand this summer. Grilling season's back. People are getting out. We're going back to baseball games, et cetera, et cetera, et cetera. That probably were undervalued right now. The Packers have been making good profits, but on the other hand, there's been this kind of this concept of, look, the consumer demand isn't quite, there to just rally the cash market higher. I don't know. It's a bit of a dilemma from our perspective. We expect that the third, fourth quarter cattle futures will be higher than they are now.
Well, and looking at cattle as well, that cattle on feed report Friday, that was a little bit better than expected to this market, and I think that that surprised some folks here today.
Yeah, it did. And it's one report. So you always have to take into account, what placement numbers look like and how to read that. But from a longer term perspective, there isn't anything what we would call just bearish out there in these cattle on feed reports. You're not looking at huge feedlot numbers at any given time. You're not looking at excessive placement numbers, which would imply that the herd is growing. If anything, you're looking at a herd that's probably at best stable. The cow-calf operator, and these statistics are old, average age is 58 years old. It's not a young man's business to be doing cow-calf and so it just, at least it hasn't been. So I don't think there's that robust herd expansion out there. And now with corn price, two things. You got one, now corn prices where they are, but two, just the dry conditions that have existed in what I'm going to call cattle country. Boy, that's concerning if you're a cattle producer out there. Where's your next pasture if you're kind of dried out, burned out?
Yeah, that's a great point you make. Those areas there in the plain states in cattle country, yeah, it could be very interesting moving forward with all that grazing land and having it dry up. Bryan, dairy market, any thoughts there on this Monday?
Continued volatility. A couple of times I thought the market was about ready to roll over and be dead, and then it comes zipping back, and it's got good demand legs underneath the market. That's what we continue to hear. We had a heck of a good day today, and all of a sudden here we are in June contract, getting closer to the highs that were established a couple of weeks ago after taking a pretty hard dip. So June picks up 44 today, or at least on the last trade, July 1950. Really encourage the producers to recognize that this is product driven right now, demand driven, that we do. And we did see last week on the milk production report, we saw another percent increase, 2% increase in production from a year ago. So that's more inventory that needs to find a home. So if the one way looking at it, say, well, 2% off of a COVID period, that should mean demand is really robust. It does, but on the other hand, it's still 2% larger. And we're moving out of school pretty quick. So for me, it's kind of tough to get overly excited about the milk market right now.
Definitely. Bryan, I know you got a busy day on your hands, busy afternoon. Any other final thoughts you have for us today?
I guess I'll just circle back to kind of this balanced approach, Jesse. As we talk to producers, and I talk to producers all day long, there aren't, first of all, there's no, as they say, there's no dumb question. There isn't. When it comes to marketing, every question's on the table. Ask. But look at really trying to think about this strategically. Doing nothing is a strategic plan, and that works well to a point. And doing nothing can be the most risky plan. But so far, so good if you've been a light seller. But at some point, you're going to need to just reward the market and close your eyes and sell these rallies and sell into some really good numbers. But one thing I'll leave this with: the market moving higher like this, run a trigger point under the market. We call it stop orders. That is, until the market kind of tips over and hits those, you're not selling anything. So as the market accelerates, you can allow the market to accelerate, and you keep moving your trigger point up closer underneath.
Well, I know if producers have those questions for you guys, Bryan, they can give you a phone call, reach out on your website, a lot of different ways they can contact you and the team there at Total Farm Marketing to get a little advice to work on their approach to what's going on right now.
Yeah, we're happy to help in any way. I'd make the argument we're a little bit old school. Give us a call. Let's have a quick chat just to see what's going on with you, your neighborhood, how your knowledge level. We do assessments too, kind of talk to producers and give them a snapshot of themselves is what we end up doing, of what they know, kind of what they don't know. And just give us a call for that.
Yeah, 800-334-9779. That's the number to call, and you can find all the info as well. TotalFarmMarketing.com. Brian, appreciate the time. Thanks for joining us on this Monday, and we'll talk to you next week.
Jesse, my pleasure. Thank you.
Bryan Doherty with Total Farm Marketing, our guest today here on Market Talk. Find us online, markettalkag.com. This has been the Monday, April 26th edition of Market Talk. I'm Jesse Allen.